Question 1. Which of the following statements accurately describes a characteristic of term life insurance? A. It accumulates cash value over time, providing a savings component alongside life coverage. B. It offers a death benefit that is guaranteed for the entire lifetime of the insured provided premiums are paid. C. It provides coverage for a specified term after which the policyholder may renew or convert the policy without further medical examination. D. It typically includes an investment component that allows policyholders to participate in the market performance of various investment options. Answer C. Explanation. Term life insurance is designed to provide coverage for a specified period, the term usually ranging from 10 to 30 years. Unlike whole life insurance, term policies do not accumulate cash value A or provide lifetime coverage B. Additionally, term life policies are straightforward, focusing on pure insurance without investment components. D. Renewal and conversion options are common features in term policies, allowing policyholders to extend coverage without undergoing a medical exam, reflecting their adaptability to changing needs. Question 2. In New Jersey, which of the following is a requirement for obtaining a life insurance license? A. Completing a specified number of continuing education hours every year. B. Passing a background check that includes credit history. C. Undergoing a medical examination before being allowed to sell life insurance products. D. Successfully passing a state-administered licensing examination specific to life insurance. Answer D. Explanation. To obtain a life insurance license in New Jersey, individuals must pass a state-administered licensing examination specific to life insurance. D. What continuing education requirements exist to maintain licensure? They do not apply at the initial licensing stage. A background check is typically conducted, but it does not usually include an assessment of credit history. B. Additionally, candidates are not required to undergo a medical examination to sell life insurance. C. These regulations are outlined by the New Jersey Department of Banking and Insurance, DOBA, and ensure that agents possess the necessary knowledge to inform and protect consumers effectively. Question 3. Scenario-based. Mr. Thompson, a 45-year-old non-smoker in good health, is considering purchasing a term life insurance policy to cover his mortgage and provide for his family's financial needs in case of his untimely death. He has the option to choose between a 20-year level term policy and a 30-year decreasing term policy. Given his situation, which option should Mr. Thompson choose and what factors should he consider? A. The 20-year level term policy, as it provides a fixed death benefit that remains constant throughout the term. B. The 30-year decreasing term policy, because it will be less expensive and sufficient to cover the declining mortgage balance. C. The 20-year level term policy, as it will allow him to lock in a premium rate and guarantee coverage for a longer period. D. The 30-year decreasing term policy, since it is designed specifically to cover long-term obligations like a mortgage. Answer A. Explanation. In Mr. Thompson's case, the 20-year level term policy A is more suitable because it provides a fixed death benefit that remains constant throughout the policy's term, ensuring that his family will receive adequate financial support regardless of when a claim is made during those 20 years. The 30-year decreasing term policy B is primarily designed to align with a mortgage decreasing balance, but it offers less security for his family's financial needs as the benefit diminishes over time, while locking in a premium rate. C is an advantage of the level term policy. The critical factor is the adequacy of coverage for Mr. Thompson's family's needs. Although the decreasing policy D fits mortgage scenarios, it may not provide enough financial protection if he passes away after a significant portion of the term. Thus, Mr. Thompson should prioritize securing a consistent death benefit to protect his family adequately. Question 4. Which of the following statements best describes the concept of the contestability period in life insurance policies? A. It allows policyholders to contest a claim if they believe the insurer has denied it improperly. B. It is a time frame during which the insurer can investigate the insured's health and lifestyle disclosures. C. It limits the insurer's ability to deny a claim based on misstatements made by the insured. D. It specifies the duration for which your policy remains in force after premiums are no longer paid. Answer B. Explanation. The contestability period is typically the first 2 years after life insurance policy is issued, during which the insurer can investigate and challenge the validity of a claim based on misstatements or omissions in the application. B. If the insured dies during this period, the insurer may deny the claim if it can prove that the insured provided false information. Once the contestability period has passed, the insurer is generally limited in its ability to deny claims based on misstatements except in cases of fraud. C. The contestability period does not pertain to contesting denied claims, or the grace period for non-payment. D. Question 5. What is the primary purpose of underwriting in the context of life insurance? A. To set premium rates based on the insurer's current financial performance. B. To assess the risk of insuring an applicant and determine appropriate premiums. C. To provide a guarantee that all applicants will be accepted for coverage. D. To review claims submitted to ensure they meet company guidelines. Answer. B. Explanation. Underwriting is the process of evaluating the risk associated with insuring an applicant. B. Underwriters assess various factors, including age, health history, and lifestyle choices, to determine the likelihood of a claim being made and set premium rates accordingly. While premium rates do relate to the insurer's overall financial health, underwriting focuses specifically on individual applicants. Not all applicants will be accepted. Underwriting may lead to declines or adjustments in coverage. C. Finally, underwriting occurs before the issuance of a policy, not during the claims process. D. Question 6. If a policyholder decides to convert their term life insurance policy to a permanent policy, which of the following is generally true regarding this process? A. The policyholder will need to undergo a new medical examination. B. The premium for the new policy will be based on the original age at issuance. C. The death benefit amount will be the same as the term policy's face value. D. The conversion feature is available only within the first year of the term policy. Answer. C. Explanation. When a term life insurance policy includes a conversion option, the policyholder can convert their term policy into a permanent policy. C. Typically without having to undergo a new medical examination. The new premium, however, will be calculated based on the insured's current age at the time of conversion. The conversion feature is not restricted to the first year, and many policies allow conversion during the entire term. D. The death benefit amount is usually equal to the face value of the original term policy unless the policyholder chooses to adjust it. C. Question 7. Scenario-based. Mrs. Johnson, the 35-year-old mother of two, is reviewing her term life insurance options. She currently has a 20-year level term policy with a death benefit of $500,000, which will expire when she is 55 years old. As her children will still be in college at that time, she is concerned about their financial security. What should Mrs. Johnson consider when evaluating her options? A. Extending her current policy for another 20 years at the same premium. B. Converting her term policy to a whole life policy, which will provide coverage for her entire life. C. Purchasing an additional term life policy to cover the years when her current policy expires. D. Choosing a decreasing term policy to lower her premium costs. Answer. C. Explanation. Given Mrs. Johnson's situation, purchasing an additional term life insurance policy C is a prudent choice to ensure her children's financial security while they are still in college. This strategy would provide additional coverage that extends beyond the current policy's expiration. Extending the existing policy A may not be feasible at the same premium, and conversion to a whole life policy B could significantly increase her premiums compared to additional term coverage. While a decreasing term policy D might lower costs, it would not meet her needs for a consistent death benefit as her children approach college, potentially leaving them underinsured during a critical time. Question 8. What factors may influence the underwriting decision for a term life insurance applicant? A. The applicant's education level and occupation. B. The applicant's credit score and financial history. C. The applicant's age, gender, and health history. D. The applicant's social media presence and lifestyle choices. Answer. C. Explanation. The underwriting decision primarily considers the applicant's age, gender, and health history C as they significantly impact the risk assessment for life insurance coverage. While education level and occupation can play a role in certain high-risk professions, they are not primary factors. Credit scores and financial history B are generally more relevant in the context of financial underwriting rather than life insurance. Although social media and lifestyle choices D may be indirectly assessed, they are not standard criteria for underwriting decisions in life insurance. Question 9. In the event of a claim, which of the following is a common reason an insurer might deny a claim under a term life insurance policy? A. The insured committed suicide within the contestability period. B. The insured failed to list a pre-existing condition on the application. C. The policyholder did not pay premiums for 3 consecutive months. D. The insured died while engaging in a dangerous hobby not disclosed in the application. Answer. B. Explanation. An insurer can deny a claim if the insured failed to disclose a pre-existing condition on the application. B. Especially if the condition directly relates to the cause of death. Claims may also be denied if the insured commits suicide within the contestability period A, which is often outlined in the policy. Non-payment of premiums for 3 consecutive months C could lead to policy lapse, resulting in a lack of coverage, but the insurer typically will not deny a claim based on that alone if the policy was active at the time of death. While dangerous hobbies D can affect underwriting decisions if not disclosed, the key factor for denial is often a direct misrepresentation of health status. Question 10. When calculating premiums for a term life insurance policy, which of the following factors is generally considered the least significant? A. The applicant's overall health status. B. The duration of the term policy. C. The face amount of the policy. D. The applicant's annual income. Answer D. Explanation. While the applicant's health status A, duration of the policy B, and face amount of coverage C are all critical factors in determining premiums, the applicant's annual income D is typically considered the least significant in the underwriting process for term life insurance. Health status significantly affects mortality risk, influencing premium rates directly. The length of the policy and the coverage amount directly correlate with the insurer's risk and potential payout. Although income might indirectly impact the applicant's ability to pay premiums, it does not typically influence the calculation of the premium itself. Question 11. Which of the following statements best describes a decreasing term life insurance policy? A. The death benefit remains level throughout the term of the policy. B. The death benefit decreases over the term of the policy while the premium remains level. C. The premium increases annually while the death benefit remains level. D. The policy can be converted to a whole life policy at any time during the term. Answer B. Explanation. A decreasing term life insurance policy features a death benefit that decreases over the term of the policy, typically in alignment with a specific debt repayment schedule, such as a mortgage. B. While the premium can remain level, unlike the death benefit, it does not increase annually. C. Level term policies maintain a constant death benefit. A. Conversion options can vary by policy, but not all decreasing term policies allow for conversion. D. Question 12. In New Jersey, which of the following is NOT, a consumer protection regulation enforced by the Department of Banking and Insurance? Dobite A. Requirement for insurers to provide clear and truthful policy descriptions. B. Mandate for insurers to approve all claims without investigation. C. Regulation of advertising and marketing practices in the insurance industry. D. Enforcement of timely claim payments and disclosures of claim processing timelines. Answer B. Explanation. The DOBI ensures consumer protections that include clear policy descriptions. A. Regulation of advertising. C. And enforcement of timely claims processing. D. However, insurers are not mandated to approve all claims without investigation. B. They retain the right to investigate claims for validity based on the terms of the policy and applicable laws. Question 13. What is the primary role of a beneficiary in a life insurance policy? A. To pay the premiums for the policyholder. B. To receive the death benefit upon the insured's death. C. To ensure that the policy remains active and in force. D. To make changes to the policy provisions as needed. Answer B. Explanation. The primary role of a beneficiary is to receive the death benefit upon the insured's death. B. Beneficiaries do not pay premiums. A. Maintain policy activities. C. Or make changes to policy provisions. D. Those responsibilities lie with the policyholder. It is crucial for policyholders to name a beneficiary to ensure the intended recipient receives the benefits. Question 14. Which of the following factors would most likely lead to a higher premium for a term life insurance policy? A. The applicant's excellent health record. B. The applicant's younger age at application. C. The applicant engaging in high-risk activities. D. The applicant's stable occupation. Answer C. Explanation. Engaging in high-risk activities such as skydiving or rock climbing significantly increases the likelihood of a claim and therefore leads to a higher premium. C. Conversely, the excellent health records, say in younger ages, B. generally lead to lower premiums, while stable occupations, D. may not impact premiums negatively, thus contributing to a favorable assessment by underwriters. Question 15. Which policy provision allows the policyholder to reinstate a lapsed term life insurance policy? A. Grace period provision. B. Misstatement of age provision. C. Reinstatement provision. D. Contestability provision. Answer C. Explanation. The reinstatement provision allows policyholders to reinstate a lapsed term life insurance policy, typically within a specified period. C. This usually requires the payment of back premiums and may require evidence of insurability. The grace period provision A allows for late premium payments but does not apply if the policy has lapsed. Misstatement of age B pertains to incorrect information provided at the time of application, while the contestability provision D allows the insurer to contest claims based on misrepresentations made within a certain time frame after issuance. Question 16. When calculating the face amount of a term life insurance policy, which of the following is generally NOT considered? A. The policyholder's health status. B. The duration of the policy. C. The cash value accumulation. D. The purpose of the insurance. E.g. income replacement. Answer. C. Explanation. The face amount of a term life insurance policy is the amount that will be paid out upon the insured's death and does not accumulate cash value. C. Other factors such as health status, A. Duration of the policy, B. and purpose, D. of the insurance are crucial for determining the appropriate face amount. Term life insurance is primarily designed to provide a death benefit without cash value accumulation, which distinguishes it from permanent life insurance policies. Question 17. What is the purpose of the accelerated death benefit rider in a life insurance policy? A. To increase the policy's face amount if the insured's health declines. B. To allow the insured to access a portion of the death benefit while still alive under certain conditions. C. To waive premium payments if the insured becomes disabled. D. To provide additional coverage for the insured's children. Answer. B. Explanation. The accelerated death benefit rider allows the insured to access a portion of the death benefit while still alive under specific conditions, such as a terminal illness. B. This rider is designed to provide financial relief during a challenging time. It does not increase the face amount, A. or waive premiums for disability, C. Nor does it specifically provide child coverage, D. Question 18. Which of the following statements accurately describes the renewal feature of a term life insurance policy? A. It allows the policyholder to renew the policy at the original premium rate without evidence of insurability. B. It permits automatic renewal of the policy without any action required from the policyholder. C. It guarantees that the policyholder can renew the policy only if they provide new medical evidence. D. It allows the insurer to deny renewal based on the insured's health status at the time of renewal. Answer A. Explanation. The renewal feature typically allows policyholders to renew their term life insurance policy at the original premium rate without requiring evidence of insurability. A. This is often available for a specific number of years. Automatic renewal, B, is not guaranteed. Policyholders may need to take action to renew. New medical evidence, C, is generally not required under this feature, and while the insurer may assess risk factors, they typically cannot deny renewal based on health status alone once the renewal option is exercised. D. Question 19. If an applicant's health status significantly changes after they apply for a term life insurance policy, which of the following is most likely to occur? A. The insurer must accept the application regardless of health changes. B. The policy will automatically adjust to a higher premium based on new health status. C. The insurer may request updated medical information before issuing the policy. D. The policy will be issued immediately without consideration of health status. Answer. C. Explanation. If an applicant's health status changes after applying, the insurer may request updated medical information before issuing the policy. C. This allows the insurer to accurately assess risk and determine appropriate premiums. Insurers are not obligated to accept the application under all circumstances. A. Nor do they automatically adjust premiums. B. Without reassessment. Policies are not issued immediately without considering health status. D. As the underwriting process must be completed. Question 20 is scenario-based. Mr. Thompson has recently purchased a 30-year level term life insurance policy. However, he is now considering starting a new business venture that involves higher risk activities. What should Mr. Thompson do to ensure that he maintains adequate life insurance coverage? A. Cancel the current policy and purchase a new one with higher coverage. B. Inform the insurer about the new venture to discuss potential adjustments to the policy. C. Do nothing, as the current policy will cover any activities he undertakes. D. Switch to a decreasing term policy to lower his premiums as a precaution. Answer. B. Explanation. Mr. Thompson should inform the insurer about his new business venture to discuss potential adjustments to his policy. B. Insurers typically need to know about significant changes in risk to maintain appropriate coverage. Cancelling the current policy A may lead to higher premiums or denial of new coverage due to the increased risk. Doing nothing C is unwise, as changes in risk could lead to issues with claims in the future. Switching to a decreasing term policy D might reduce costs but would not adequately address the increased risks associated with his new venture. Question 21. Which of the following best describes the contestability period in a life insurance policy? A. It is the time frame during which a policy can be renewed without evidence of insurability. B. It is the period within which the insurer can investigate and deny claims based on misrepresentation. C. It is the time frame in which the insured can file a claim after the policyholder's death. D. It is the period during which the insurer must pay claims regardless of the circumstances. Answer. B. Explanation. The contestability period is typically 2 years from the policy's effective date. During this time, the insurer can investigate and potentially deny claims based on misrepresentation or fraud. B. It does not pertain to renewal. A. Filing claims. C. Or guarantee payment of claims regardless of the circumstances. D. This period protects insurers against dishonest applications and encourages accurate disclosure from applicants. Question 22. What is the primary function of the grace period provision in a term life insurance policy? A. It provides the insured with additional coverage for a limited time after a claim is filed. B. It allows the policyholder to pay premiums after the due date without losing coverage. C. It guarantees that premiums will not increase for a certain number of years. D. It ensures that the insurer must pay claims within a specific time frame. Answer. B. Explanation. The grace period provision allows the policyholder to pay overdue premiums after the due date without losing coverage. B. Typically lasting 30 days. This provision ensures that policyholders have time to make payments before their coverage lapses. It does not provide additional coverage after a claim. A. Guarantees stable premiums. C. Or dictate claims payment timelines. D. Question 23. Which of the following factors is most likely to lead to a denial of a life insurance claim? A. The insured had a history of high cholesterol that was disclosed during underwriting. B. The insured died within the contestability period due to natural causes. C. The policyholder failed to pay premiums during the grace period. D. The insured misrepresented their smoking status on the application. Answer. D. Explanation. Misrepresentation of smoking status on the application. D. Can lead to claim denial, especially if it is determined that the insured was a smoker at the time of application, as this significantly affects risk assessment. A history of high cholesterol that was disclosed A. would not lead to denial, and dying from natural causes within the contestability period. B. Does not automatically result in denial unless misrepresentation occurred. Failure to pay premiums during the grace period. C. Could lead to cancellation of the policy but does not directly result in a claim denial if the claim occurs within the grace period. Question 24. Which of the following accurately describes the implications of the waiver of premium rider? A. The rider guarantees the policyholder will receive a refund of all premiums paid if they become disabled. B. The rider waives premium payments for the policyholder if they become disabled for a specified period. C. The rider converts the term policy into a whole life policy upon the policyholder's disability. D. The rider increases the policy's death benefit if the policyholder becomes disabled. Answer. B. Explanation. The waiver of premium rider allows the policyholder to have premium payments waived if they become disabled for a specified period, maintaining coverage without additional financial burden. B. It does not guarantee a refund of premiums. A. Convert the policy type. C. Or increase the death benefit. D. Question 25. In New Jersey, which of the following actions would be considered insurance fraud? A. An applicant omits a minor medical condition that has no impact on their health. B. An applicant provides false information regarding their income to secure a low premium. C. An applicant discloses all health conditions accurately during underwriting. D. A policyholder fails to update their beneficiary information after divorce. Answer. B. Explanation. Providing false information regarding income to secure a low premium constitutes insurance fraud. B. Omitting a minor medical condition. A. May not necessarily be fraudulent unless it affects underwriting decisions. Accurately disclosing health conditions. C. Is not fraud, and failing to update beneficiary information. D. Does not fall under fraud. Rather, it may lead to complications in claims. Question 26. What does the term face amount refer to in a life insurance policy? A. The amount paid to the beneficiary upon the insured's death. B. The total premiums paid by the policyholder over the life of the policy. C. The cash value of the policy at the time of surrender. D. The maximum amount the insurer will pay for a claim. Answer A. Explanation. The face amount refers to the amount paid to the beneficiary upon the insured's death. A. It does not represent the total premiums paid. B. Or the cash value upon surrender. C. Nor does it indicate a maximum claim payout, as that would typically refer to policy limits or provisions outside the standard face amount. D. Question 27. Which of the following is a primary reason for conducting the underwriting process for life insurance applications? A. To ensure that all applicants pay the same premium rates. B. To assess the risk associated with insuring an applicant. C. To provide automatic coverage for applicants regardless of their health. D. To establish a set premium for all term life insurance policies. Answer B. Explanation. The primary reason for conducting underwriting is to assess the risk associated with insuring an applicant. B. This process allows insurers to determine appropriate premiums based on the applicant's health and lifestyle. Insurers do not provide automatic coverage without assessment. C. And do not set a universal premium for all policies. D. As underwriting is essential for individualized risk evaluation. Question 28. If a policyholder chooses to convert a term life insurance policy to a permanent policy, which of the following is a potential advantage? A. The policyholder will receive a refund for any unearned premiums. B. The policyholder will not need to provide evidence of insurability. C. The death benefit will automatically increase upon conversion. D. The premiums will decrease once converted to a permanent policy. Answer B. Explanation. Converting a term life insurance policy to a permanent policy typically allows the policyholder to do so without providing evidence of insurability. B. Which is a significant advantage for those whose health may have declined. The policyholder does not receive a refund for unearned premiums, and while the death benefit may be adjusted, it does not automatically increase. C. Premiums for permanent policies are usually higher than term premiums. D. Question 29. What is a common characteristic of universal life insurance policies? A. They provide a fixed death benefit for a specified term. B. They have a cash value component that earns interest. C. They cannot be adjusted or modified after issuance. D. They require premiums to be paid annually. Answer B. Explanation. Universal life insurance policies have a cash value component that earns interest over time. B. Unlike term policies, they are flexible and can be adjusted or modified after issuance. C. Premium payments can also be made on a flexible schedule rather than strictly annually. D. Question 30. Scenario-based. MS. Ramirez is reviewing her life insurance policy and discovers that she has not updated her beneficiary designation since her marriage. What should MS. Ramirez consider doing to ensure her policy reflects her current wishes? A. She should ignore the issue, as her current beneficiary will automatically be her spouse. B. She should contact her insurer to request an update to the beneficiary designation. C. She should cancel the policy and purchase a new one with her spouse as the beneficiary. D. She should consult with a financial advisor to discuss the implications of changing beneficiaries. Answer B. Explanation. MS. Ramirez should contact her insurer to request an update to her beneficiary designation. B. Failing to do so could lead to complications in claims if her previous beneficiary designation does not align with her current wishes. Beneficiary designations do not automatically update upon marriage. And while cancelling the policy, C, is an option, it is unnecessary if she can simply update the beneficiary. Consulting a financial advisor, D, could be beneficial, but the immediate action of contacting her insurer is crucial for ensuring her wishes are accurately reflected in the policy.